Good morning. This is Dylan Giovanni with Behind the Markets. Happy Monday. Today is Monday, August 10th. I cannot believe we're making it into the month. I can't believe September is a few weeks away. Anyway, today I'd like to talk about a new note out from Bank of America that I have here, where they track what they call their bull bear indicator. It's at 9.7, which means people have gotten very, very bullish again in the past couple weeks. You saw it was very, very bullish earlier in the summer. Then it got kind of really bearish with the chip stocks selling off in the past month. And now we're looking bullish again, which is kind of crazy. And a lot of that is going to be helped by Friday's print on the jobs market. Basically, the U.S. jobs market was a lot weaker than expected. The U.S. economy unexpectedly lost 23,000 jobs in July, which sent the market up, or has a kind of a bias to send the market up, because what it means is the Fed is less likely to raise interest rates. And heck, if it's this soft, the Fed might even lower interest rates. So Bank of America's note saying that people are bullish again. Bank of America also, in their note, says they argue that this bull indicator, so high, basically at 9.7, which is one of the highest, basically, as I said, since December 2020, one of the highest of all time. They've been tracking this for 24 years, as they said. They said that every time it hits this kind of level, this kind of 9.7 level, right close to 10, it's a sell indicator. And it says since 2002, this sell signal, it's hit this high level 17 times, okay? And over the following 2 to 3 months after it hits this signal, stocks have declined by average of 2 to 3%, with the signal proving correct about 60% of the time. So a bit better than a coin toss. Maximum drawdowns during this time range from 15 to 20%, meaning that every time B of A's signal hits this high nines, I guess over 9.5, between 9.5 and 10, 10 being the top, basically in euphoria, this bull signal, they say 60% of the time it is time to sell. And Bank of America says they recommend retreating from risk assets and kind of going into safer things, which is kind of funny to me because I don't really recommend that. My investment philosophy is kind of a lot more simple. It's just buy things regardless of whether the market is high or low. Buy assets for less than they are worth, really. And, when you play the game that way, when you're just a kind of a, value investor, such a silly word. What is value? Everybody's a value investor. Everybody is trying to buy something for less than they think it is worth. Period. I don't even know how that name became a thing, value, kind of a funny name. No matter your growth investor, everybody's trying to buy something for less than they think it'll be worth in 6 months, a year, 5 years, or 10 years. So we're all trying to find value in assets, period. But the way that I was taught how to do it by the great teachers of my life, that kind of Warren Buffett school, that intellectual village that I've kind of gravitated towards, really teaches you to try to buy $1 for 50 cents or 30 cents or 40 cents. And what you find when you do that consistently over time is, obviously you don't get them all right. We're not superheroes. That's fake news. If you look on our website, we have a 74% success rate, about a 40% average gain on every trade that we do. And the best part is, it probably would even be higher, but I have to think of my customers, many of whom, most of whom are retirees. And the name of the game in my business, for us here at Behind the Markets, certainly not for our competitors, is to protect our customers. It's funny. A lot of our customers have written in it. It's a fair complaint about me. It's like, you recommended this stock at 10 and, you sold it at 50, then it went to 100. Why'd you sell it at 50 when it went to 100? And that's a fair complaint. He said, my so-and-so editor at this other shop didn't do that. He has had a bigger winner on the same stock. And I think to myself, and I respond this way, look at both track records and tell me which one's better, because it's the same discipline that forces me to sell when something is above its value, not to ride euphoria up. It's the same discipline that allows me or produces a whole bunch of other behaviors in this person right here, including but not limited to risk management and higher probability bets. Yes, there are some guys who they're more cowboyish than me, or some ladies that are more cowboyish than me. But, you got to play your system. I've developed this system over decades. If you have a 70 some odd percent win rate and around 40% average gains on your trades, you do really well over time. Take it from the guy in the black t-shirt. Anyway, that's all I have for you today. Have a wonderful day. I'll see you tomorrow.